Welcome back to Money Talks. I am Jonathan Thompson. I'm happy to share with you once again as we talk about banks and credit unions. But first, if this is your first time joining the channel, please take a moment and hit that subscribe button. And if you like the content, go ahead and give me a thumbs up. And just so I can get to know a little bit more of you and what you guys like, feel free on your comments on this video or on other videos. Go ahead and leave a comment and let me know that you're here, what you like, what things you would like to hear. So, all too often, one of the first things as you're starting to get into your financial wellness and really start to learn and dig down into your personal finances, you have to start to wonder, well, where do I bank? What's the best bank? And the truth is, there's so many different options to how you can bank. But ultimately, you want to drill down and you're going to come across, should I have a bank or should I have a credit union? And the most important thing you really need to realize is what are the strengths of each institution. So when you think about your banking needs, when you think about checking accounts, saving accounts, things of that nature, that's typically where banks, Bank of America, Wells Fargo, BB&T, just any bank you can think of, Capital One, that's typically where they tend to do their strength and where they get their bread and butter. That's what they're known for. When you think about your loans and lines of credit, if you want an auto loan, a personal loan, or really starting to dig down into that credit card, things that will help you with your credit, mortgages, even, you really start to lean in the strength of a credit union. And typically, it's because a credit union, they're non for profit, which means all their profits that they earn comes and gets poured back into some type of benefit. And the most common benefit that it turns into for you, the member, would be interest rates on loans and also savings accounts or CDs. But then also when you think about, okay, I'm looking more towards my investing and what's going to be the best opportunity, who's going to be the best person to be able to support me on my investing journey while I'm going through and trying to build this wealth. That's typically where you're going to look to something like a investment firm, like a Fidelity, a Vanguard, which is so popularized now, Charles Schwab, all those different firms, they're going to be the ones that you tend to dig in. So how do you kind of nail down and drill which one is best for me? Well, first, as we start to uncover, when you look at your checking account, you want to look at not just, oh, do I have a direct deposit or things of that nature. You actually want to approach this decision like you would approach any other decision. So here's some things you might want to think about. Well, what happens if you lose your debit card? What happens if you have fraud on your debit card? What is the process there? How are you going to be able to deposit? Are you going to always have to come in and deposit? Or will you have a certain tolerance that you can deposit at the ATM? What type of online access and features do you have? Will you be able to transfer to different accounts or to friends and family that you need to support? These are just general questions, but I would say they're the most common things when you're thinking about a checking account. The truth is, as long as you have a direct deposit, and most people average a direct deposit between $750 and $1,000, that seems to be pretty common in a month. In addition, that makes it pretty easy for you to pretty much avoid anyone's fees. But like anything else, a bank and a credit union, they're both businesses. So their business is not based or predicated on how many fees can they charge you, but it is actually built on how well and how much can we support you on your financial journey. So I would really start to encourage you to really think about your banking relationship. Are you getting the full use and support that you need to help you be financially successful? So, are you incurring fees, meaning monthly maintenance fees or fees to use the ATM or uh, overdraft fees, any type of fee, paper statement fees? There are so many different fees that you can particularly be charged, which is why I don't suggest. And one caveat that you really need to pay attention to is not to have one of those loadable debit cards, because typically they charge fees for everything. Charge fees for you to receive your money, charge fees for you to take your money, give you a certain allowance of how much you can take, charge you a fee to just check the balance on your card. So those are never easy to help you maintain your finances, because to be quite honest, though a $2 or $3 or $10 fee may seem small and insignificant, it can affect your overall financial position, your day-to-day cash flow over time, and really put you in a bind. A statement fee or monthly maintenance fee can be the trigger that, if you're not meeting those monthly requirements, can send you into overdraft, which paying $32 for a $10, $11 charge just won't be acceptable or help you get progress. So really think about where you're banking, but really start to think, okay, what are some things that have happened to me in the past? And how will this institution help me and help me solve that problem in a relatively fast way? Because there are a lot of banks and there are a lot of similarities, the fact is each bank gets and encourages you to bank differently, meaning by your behavior. So you want to bank someplace where you're not forcing yourself out of too much of a comfort zone, but someplace where, based off the rhythm of your budget, makes it easier to bank. And of course, my philosophy is the simple or easiest way it can be will be the best way. And that's why credit unions typically offer a little bit more ease when it comes to checking accounts. Not only is it typically easier to acquire a checking account with them, but you don't see those maintenance fees. You don't see those statement fees and things of that nature. Typically, their fee schedule is very small. So they tend to be a little bit and have over time become a lot more popular when it comes time to pick your financial institution. So moving forward, really think about where you want to bank at for your checking account. The next thing you want to look at is your savings account. This is typically where online banks are starting to get their popularity, because they typically offer higher rates than banks, brick and mortar banks you can walk into, or credit unions that you can walk into. Online banks just have that comparative advantage where they're able to give you that good solid rate. But remember, that emergency fund or that cash you're keeping on hand, it's not really there for you to actually build wealth. It's there to help and secure the wealth that you're building. So it's insurance, so to say. So what you're making on that account, sure, if you can make $15 or $20 a month, obviously that's better than $1, but that $15 or $20 a month is not going to get you to the wealth and the millions that you want to get from an aspiration purpose. So you really want to think about, hey, where am I going to get the most bang for my buck? But then also from an emergency standpoint, online banks make it a little bit easier because that's not something you can readily access. You can access quick, but it also gives you that pause when an emergency happens or when something all of a sudden happens. You can then take time to really think through, because it may be a day or two before you can get those funds. So in your savings account, really think about the accounts that you have open and are you actually using them? And next, really think about where are you going to house your credit. Now, every bank and every credit union offers credit cards and things of that nature. But then you also have to think about who is going to actually give you that opportunity for it. Most credit unions and banks, they're moving towards that relationship model. So having that direct deposit, having a few $1,000s in cash and a savings fund, an emergency fund built up, that will actually help you as you start to build your relationship. But when you're thinking about credit, ultimately, it makes it easier if your checking account or your savings account is right there with the person you have a credit card with. Why? Because it makes it easier to pay. So you want to really look at your full opportunities with your savings account and don't really think or force yourself into opening a savings account with every place that you have checking accounts. Will you need just one checking account? Will you need multiple? But ultimately, these are things you have to manage. So the simpler, as far as from a fee perspective, it is for you to manage, so you don't have to worry about, the easier it is for you to manage your month. So I would definitely encourage you to really look at, number one, where you have your checking account with. What are they going to be able to help you when problems arise? And how fast are they going to be able to help you? And will that be suitable for your situation? Number two, no, it is good to actually have a savings account, but you don't have to have a savings account everywhere. Are you actually saving in the savings account that you have? So really think about, if you're not using it, it's just taking up space. And ultimately, that will be more of a risk to you in regards to fees and just overall damage to your relationship. Then look at your credit card relationship. Where are you housing your credit card? Are you able to put this in your online banking? Is it easy for you to pay your credit card? Is your online banking easy to navigate? Are you able to do transfer? All these things are things you should be thinking about when you're entering a banking relationship, because ultimately this is the person who you're choosing to help support you in your money journey. So it's very important that you understand what you're getting and what you could get out of that relationship. And the difference between banks and credit unions is how they operate. Credit unions tend to have a little bit more leniency when you have a lower score. Yes, they also tend to charge you lower rates, but they are a little bit more lenient in that area of if you're trying to build credit or just establish some sort of banking relationship. So it may be easier and overall better for you to join a credit union in that matter. Banks, it's not that they are profitable, but they are structured in the way that they determine those relationships. So you have to think about, can I meet the requirements? Sometimes you have to go through a processing like check systems and things of that nature. So old accounts can prevent you from actually getting a new bank account. But ultimately, just because you can't get a bank account as a bank doesn't mean you can't have a bank account anywhere. It just means that particular bank you won't be able to bank with at this time. I know for me, I do bank at Bank of America, but I wasn't able to bank there when I started working there. I had to actually get an approval because I had an account and it closed and I still owe, but I paid it. So just because you work there, it sometimes offers a better benefit for you to get that account, but it doesn't stop the fact that you can get turned down. Lastly, I definitely want to dive a little bit deeper into the brokerage account. So when you think about your brokerage account or your IRAs or things of that nature that are tools that are going to help you invest, you need to think about, what type of funds are you trying to get? So for me, I've had brokerage account at banks. I've had brokerage accounts at investment firms. And what I've found is, through all of those, the brokerage account, you typically have very, very simplistic approach. They're not going to charge you. And if you are charged, you need to seek another institution. But in your brokerage account, you want to think about the funds that you're holding and the fees that you're charged. And when you think about what type of things you're trying to purchase, does that particular institution offer that? Banks and investment companies, investment firms don't often offer the same things. And from a liberty and some stocks that you want to get, you may not be able to get at a bank like a Bank of America, Wells Fargo, things of that nature. You may only be able to get that from a capacity standpoint at an investment firm. So it's really important that you understand what you can get from that investment firm. The other thing you want to pay attention to is account minimums or minimums to buy, or how easy it is for you to acquire different pieces of your investment portfolio. These things are very, very helpful in helping you streamline your investing process. By default, as your assets grow, complexity will come. So it's most important for you to realize that you need to keep things as simple as possible on the front end and make things as easy as possible. It's no secret that I like investment in index funds now. So using those index funds and trying to acquire those index funds, and the ones that I like and I'm most comfortable with may not be offered in the way that I'm used to seeing them at a bank. And me trying to navigate their system may be difficult. So a lot of times the expertise that you need may sometimes come at a cost, meaning you have to have a certain level of assets with that firm, or you have to buy or things of that nature, but typically it's around the balance. So it's very important for you to really look at, hey, if you're just starting out this investment journey, you're going to need support at all stages. So what can you do and who should you go with that's going to offer you that support without so much red tape? I hope this is helpful as you start to drill down into finding a relationship in the institution that works for you. Remember, if you're being charged fees into your account, there are things that you're doing wrong, and those are things that you can actually prevent. And maybe that bank isn't the best suit for you. Maybe you need to look somewhere else, or maybe you just simply need to make changes in how you're banking. Ultimately, when you to be most successful, you want to make sure that you're not causing yourself any fees. And you really want to be running your budget about a month ahead. That means when a bill comes in, you're able to pay right away, because that behavior over time will yield you great results and ultimately opening up doors for you to, number one, establish credit if you're not trying to, or if you have an issue where sometimes there is a mistake and something does come in and you just missed it from a timing perspective and you do get charged a fee. All these things will happen, but some of these fees and occurrences that do happen can be prevented just by you doing a little bit of homework on the front end. I hope this message was definitely helpful as you decide whether you should bank at a credit union or a bank. But most importantly, I want to offer you a little bit more information for you to consider when making that choice. Until next time, I'll see you again on Money Talks.